Hey everyone, it is that time of the week again. One of the coaches at Unga Academy here, and welcome back to our usual chat that we have every weekend about the performance of the financial markets. As always though, before we start, I invite you to please subscribe to our channel. Go and click on that notification bell, and if you haven't done so, please leave us a like to this video as well. Thank you so much. Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alrighty, so this week wasn't an easy one for the markets. I mean, we saw stock equities, we saw bonds and metals going down, while energetics and grains in particular went up. So nothing new compared to the last few months. Now, these movements were partly derived from the gloomy US inflation data and thus the fear of further rate squeezes that especially impacted the performance of the stock and bond indexes. Now, this chart here, this shows the mini SP 500 losing 4.32% this week. Now, this is a bad drop, especially in the last 2 days. The same can be said for all the major stock indexes, so the Nasdaq, also the Euro stocks and DAX. Bonds also performed badly, as mentioned earlier, with the T-bond losing 1.22%. Bonds had hinted at a rebound, but over the past couple of weeks, well, they've been practically eaten up, all or most of the gains. And this situation holds true for the US bonds as well as for the European 10-year bond, namely the Bund, which has also touched some lows. Those who are doing well are the energy markets. And we know that this depends on the ongoing conflict between Russia and Ukraine, which brings pressure to this asset class. Here's the crude oil. Now, this came in close to the highs that it recently touched. Gasoline is also at really important highs. So overall, the energy sector is certainly under pressure. Now, the underperformance of the metals also continues. In fact, despite the fact that they are often considered as safe haven sectors where to invest in times of uncertainty, they have been doing poorly lately. Let's just check out their 3-month returns. You see, they're all negative. And the same applies to the 1-year return, so the metal sector is underperforming. What else is interesting to note is that the soft commodity sector, well, we can see that the run-up in orange juice and cotton continues. And as I've already mentioned, the grains market is also showing great strength. Let's take a look at the soybean, which has come out of this trading range, which, to be honest, was a pretty wide one. However, it has managed to reach these important highs, and a little bit like all the commodities in the grain sector, it's currently at pretty remarkable highs. And also in this case, these levels are the result of the pressure on this market coming from the conflict between Russia and Ukraine. Now let's turn on to the currencies. Well, we see that the US dollar is pretty strong against all other currencies. The Euro FX, namely the future of the euro-dollar currency pair, has reversed the recovery that it had made. We're at about 1.06 right now. But what is interesting to note is that the US dollar is strong, not only against the euro, but against all the other currencies. And finally, let's take a look at Bitcoin. It was an insignificant week on Bitcoin, which practically remained unchanged and is consolidating within this trading range. However, the cryptocurrency market is also weak. Incidentally, of all cryptocurrencies at the moment, Bitcoin is one of the currencies that is holding the most. Finally, as far as volatility is concerned, obviously it remains high, especially in the long run, because in the short run we touched very high levels, so it has dropped a little bit in the short run, but still it remains high over a 1-year time horizon. If we go and take a look at the term structure of volatility, we can see that this week the implied volatility indexes on the SP 500 went up. The term structure is a little mixed, but it isn't in backwardation. Now, let's say it's not well defined, but it isn't showing any specific symptoms of panic either. The VIX right now is at 27.72, about half of the values it recently touched. So it is a situation to keep an eye on because although implied volatility isn't particularly high, in light also of recent data, the situation could evolve even very quickly. All right, let's take a look at the rollover calendar. Next week will be the Three Witches Day, thus the maturity of the equity indexes. Therefore, the European indexes, the DAX, Eurostox, FIB, etc. will need to be rolled over. US indexes, on the other hand, have already been rolled over this week because usually the increased liquidity moved from one maturity to the next 1 week in advance of the futures maturity. We'll then have on the 14th to roll over also on cotton, and finally on 15th, crude oil. Finally, guys, if there is someone among you who is interested in systematic trading, my advice is to take a good look at the link in the description of this video. You'll be able to watch a free presentation by Andrea Unger, who will introduce you to his trading method, which enabled him to win the World Cup Trading Championships of real money trading, not once, not twice, but 4 times. In addition, you'll also be able to get his bestseller, The Unger Method, and much more. All right, with that, guys, we will see you again next week. Please leave us a like to this video if you liked it, and please subscribe to our channel. Have a great weekend, and we'll see you soon. Bye-bye.